Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance broker. And I've returned today to weapon tap on your head with another ADH wealth solution. So today, we're going through that series again, the right questions, know what to ask. Today, we're going to go over some investment terms. So today, what we're going to Google is what are capital gains. So it says here, capital gain is an economic concept defined as the profit earned on the sale of an asset which has increased in value over the holding period. An asset may include tangible property, a car, a business, or intangible property such as shares or stocks, right? And then that's capital gains, right? So now what are capital losses? Capital loss is the difference between a lower selling price and a higher purchase price or cost price of an eligible capital asset, which typically represents a financial loss for the seller. Think short sale in a house. This is distinct from losses from selling goods below cost, which is typically considered loss in business income. And then let's see what are some examples of a capital loss. If an investor bought a house for $250,000 and sold the house 5 years later for $200,000, if the investor realizes a capital loss of $50,000. Okay. Now, this is why things like crypto might have been interesting to you. Hold on, let me erase this whole thing. And we're going to look at the next question here. What are unrealized gains? An unrealized gain is a theoretical profit that exists on paper, resulting from an investment that has not yet been sold for cash. So, what would an unrealized gain be? Unrealized gains are all these things that your latest crypto guru or your latest forex guru or your latest options guru tells you about, where, hey, I sold such and such for $1 bazillion and I bought it for 17/1000th of a cent. And now it's worth $40 bazillion. I'm going to go get a Lambo. Unfortunately, what they don't tell you is, again, like I've said in prior videos, because nobody has given you this $400 bazillion for this Bitcoin, you have not realized the gain. So you have not gotten this $400 bazillion for this Bitcoin. Therefore, it is not real. It is as real as the VC in my NBA 2K account. Though now I can buy the dunk package, right? Now, what are unrealized losses? So, an unrealized loss is a loss that occurs on paper when the current market value of an asset or investment falls below the price originally paid for the asset, but the asset has not yet been sold. Since the asset is still owned and not sold, the loss is unrealized and only exists in theoretical terms. So now, what is an example of an unrealized loss? And this is from Investopedia. Let's look at more results here. All right, yeah. So assume, for example, that an investor purchased 1,000 shares of widget company at $10, and it's subsequently traded down to a low of $6. The investor would have an unrealized loss of $4,000 at this point. If the stock subsequently rallies to $8, at which point the investor sells it, the realized loss would be $2,000. So here's where investing becomes something that you have to be stoic with and or about. Why? Because you get into a situation where your friend told you to buy ABC XYZ and you bought it. And now you're feeling good. Hey, thanks to John Smith, I just came up $400, man. I'm up. And now you're up. And then it suddenly goes down. Man, John Smith don't know what he's doing. I'm down $400. And then you sell it. Now you're down $400. If you don't sell it, which is why you need to know what a time horizon is when you're investing or an exit strategy, you don't realize the gain or the loss. Now, what is a time horizon in finance? An investment time horizon, or just time horizon, is the period of time one expects to hold an investment until they need the money back. Time horizons are largely dictated by investment goals and strategies. So this is why when someone tells you buy term and invest the rest, it's very bad advice. We've already looked at how only 1% of term life insurance ever pays out a death benefit. And if someone tells you to invest the rest and doesn't look at things like your time horizon or risk tolerance, then that's fairly dangerous. So we're going to go through one more question, right? What is time horizon when it comes to finance? Now, let's look at what is risk tolerance. Tolerance in investing. What is risk tolerance? Simply put, risk tolerance is the level of risk an investor is willing to take, but being able to accurately gauge your appetite for risk can be tricky. For risk can mean opportunity, excitement, or a shot at big gains. And you have to be in it to win it mindset. And this is from Charles Schwab, right? So let's see here. What is risk tolerance? The amount you're willing. So, for example, if it takes you several years to save up $10,000 and the minimum investment is $10,000, you have to pay $10,000 plus my commission to invest this $10,000. And then the next day the market takes a crash and your $10,000 goes to zero. You're not getting anything back from me. You're going to get a call. Hey, Bob, you lost your $10,000. Sorry. Hey, you want to try this next investment? Plus my commission? So you need to ask, well, have you gauged my risk tolerance? Have you gauged my time horizon or my exit strategy? Let's look at what exit strategy is, and then we will leave. What is exit strategy in investing? So the bottom line, exit strategy refers to how a business owner or investor will liquidate an asset once predetermined conditions have been met. So what is an exit strategy in investing? Exit strategies are plans executed by business owners, investors, traders, or venture capitalists to liquidate their position in a financial asset upon meeting certain criteria. An exit plan is how an investor plans to get out of an investment. So anyway, ladies and gentlemen, this is why people take advantage of you. Unfortunately, you don't know the questions to ask. And unfortunately, people like me don't get enough light shined on us to help educate you. And unfortunately, fortunately, due to things like YouTube, you guys will spread the message. So that's going to be it for today, ladies and gentlemen. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. With that being said, ladies and gentlemen, wipe ass, work in progress every day, and see success. And remember, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.